All right, 15.4. Now we're going to work on federal income tax. We're going to start with our general journal, and I'm going to talk for a little bit. So the unadjusted trial balance acts as a checklist to make sure that the business brings every account up to date. The accountant can start by examining each asset account to determine if the account needs adjustment. This process continues through the liability and owner's equity accounts. So at the end of the year, that accountant's job gets pretty difficult. Adjusting entries are made in the order that the accounts appear on the trial balance. So allowance for uncollectible accounts is the first account that needs adjusted. Merchandise inventory is adjusted next, then supplies office, and so on. The process does not end once every asset, liability, the process does not end once every asset, liability, and owner's equity account is examined. 3 Green's accountant would also review the revenue and expense accounts. This process ensures that every account on the trial balance is up to date. An accountant can perform this process in reverse order by first examining revenue and expense. Then the asset, liability, and owner's equity accounts would be reviewed. The adjusting entries would be the same, but would be journalized in a different order. So the problem is we have 2 accounts that are not adjusted at this time: the federal income tax payable and the federal income tax expense. These accounts will be adjusted after all other adjusting entries are posted and the net income before federal income tax is determined. Adjusting entries are posted to the general ledger to bring the account balances up to date. Okay, so here we have our general journal. Uncollectible accounts expense. Uncollectible accounts expense gets transferred down here. Debits. Allowance for uncollectible accounts. Allowance for uncollectible accounts. Credits. And then rebalance. Okay, enter general ledger account numbers in general journal. So 1135 goes right there. 6165 goes right there. After adjusting entries are posted, an updated trial balance can be prepared. A trial balance prepared after adjusting entries are posted is called an adjusted trial balance. Okay, the adjusted trial balance is prepared in 2 steps. First of all account balances except for the federal income tax expense are entered in the trial balance. This information is used to plan the adjustment for federal income tax expense. Then, after the adjustment is posted, the account balances for federal income tax expense and federal income tax payable are entered. So first we enter the account titles of all the general ledger accounts. All of them. Then we enter the account balances of all the accounts except the federal income tax expense. Right there, left blank. Then we calculate the total account balances of income statement credit accounts. Include the account balances of income summary if the account has a credit balance. So we add everything up, $635,345.90. Then we calculate the total account balance of income statement debit accounts, excluding the balance of the federal income tax expense, which isn't written there anyway. Include the account balance of income summary if the account has a debit balance. Okay, there's our income summary. Okay, there we go. And then subtract the total of debits from the total of credits to calculate the net income before federal income taxes. Okay, subtract those, we get number 5. All right, now we need to calculate the federal income tax. Corporations anticipating annual federal income taxes of $500 or more are required to pay estimated taxes each quarter. Estimated income taxes paid in quarterly installments in April, June, September, and November. The actual federal income tax owed is calculated at the end of the fiscal year. A corporation must file an annual tax return reporting the actual income tax owed. Any additional tax owed that was not paid in quarterly installments must be paid when the final return is filed. Okay, we have different tax rates are applied to different levels of net income. There's a chart on the next slide that explains that. Each tax rate and taxable income amount on one line of a tax table is called a tax bracket. Your parents all pay taxes in tax brackets too, depending on what their income is. The tax rate associated with a tax bracket is called a marginal tax rate. So we have the tax rate schedule. These are the tax brackets. And then we have the taxes. So the first step in calculating federal income tax is to find the correct tax bracket. 3 Green's net income before federal income tax, which we got from that slide, $103,518.97. That places 3 Green in the over 100,000, but not over 335,000 tax bracket. 3 Green's income tax will be $22,250 plus, so right here, plus 39% of income above 100,000. Okay, so let's do some math there. Oh, that moved. Hold on. I messed with that last night. So we're going to go here. Net income before taxes minus the $100,000, which you see right here. So we only have to pay taxes on this amount right here, times 39%. So 3518 times 0.39, $1,372.40. So we do our tax bracket amount plus the 39%, and this is our federal income tax. Yeah, I messed with that one. I didn't realize it moved. All right, so we need to journalize that. Okay, we have the quarterly. This is what we paid quarterly. So we paid enough, but we didn't. We paid a lot, but we didn't pay enough. 3 Green made 4 quarterly tax payments of $5,000. That totals $20,000, but that's less than we owe of $23,622.40. So we must adjust the balance of federal income tax payable to recognize that additional amount that we owe. 3 Green will pay this amount when it files its tax return with the Internal Revenue Service. That means we need our 4 questions you thought you were getting out of it. Okay. Whoa, is that typo been there the whole time? Sorry about that. What is the balance of the account being adjusted? Federal income tax payable. It's 0 right now because we left it blank. What does it need to be? 3,000. Another typo. $3,620.40. And then, so we need to increase it by $3,622.40. And we have to do that by debiting federal income tax expense by $3,622.40, and then crediting tax payable by $3,622.40. So let's see how that looks like on our sheets. Our general journal, we've got that. So federal income tax expense, right down here. The dates, general journal 15. It's a debit. Okay, and then a new balance. And then our federal income tax payable oops, right here, it's a credit, account number, General Journal 15. Got it. Yep, and yep. All right, almost done. So completing a trial balance. The adjusted trial balance can be completed after the federal income tax expense adjustment is posted. The account balances for federal income tax payable and federal income tax expense are entered in the adjusted trial balance. Right, oh gosh, wrong way. Right there. And look, it balances. Enter the adjusted balance, federal income tax payable, and expense. Total, prove, and rule, and you're done. How does the trial balance serve as a checklist for preparing adjusted entries? A business can examine each account to determine if the account needs adjustment. In what order can the adjusting entries be journalized? By the order the accounts appear the trial balance, beginning with assets or revenue. So from top down or bottom up. Which accounts are totaled to determine net income before federal income taxes? All income statement debit accounts excluding federal tax expense and all income statement credit accounts. What is the tax bracket minimum tax and marginal tax rate of the 25% tax bracket? We're going to go this way and look. Sorry. Little tedious. Could have done it a different way. There we go. What was the question? I've already forgotten. Here they are. What is the bracket minimum tax and marginal tax rate of the 25% tax bracket? Right here. So the bracket minimum tax, $7,500, and marginal tax rate, 25%. Oh, I lost my, there we go. Okay, we're going to skip down. 7,500 and 25%. And that is it.